The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. On behalf of HDFC Securities, I welcome you all for this session on weekly FNO Outlook. Firstly, let me introduce myself. My name is Tarang Solani. I'm the product manager for derivatives. And along with me, we have Mr. Devarsh Vakil, who is our deputy research head, who will give us the weekly FNO Outlook on the market. So before starting, we'll just give you a brief. Will provide you some of the useful features of Pro Terminal first from my side, and after because there is one useful tool called as Pro Terminal, which has been very much useful for the FNO traders. So I will just provide you an feature of it, and then post that. Mr. Devash Vakil will provide us on the view on the market, since tomorrow is a weekly expiry, and market has been showing good amount of volatility. Today also we did saw market did show significant amount of fall in today's trading session. Suppose that Mr. Devash will provide us with the outlook on the market, and after that we'll take all the question answer section. Whatever questions you have, we'll reply you back. So I will just share my screen, providing you some of the useful features which you can trade, which you can take benefit by using Pro Terminal. I'll just share my screen. So I hope my screen is visible to you all. So Pro Terminal is basically our advanced trading portal, wherein it is more of an analytical platform where you can use lot many ready-made analytics and take view on the markets. And also it has lot many features for the order execution. So today what we'll discuss is about order slicing features. So if any of the clients who basically trade in a big quantity in Pro Terminal, through Pro Terminal, it is now very much easily you can execute this big quantity, because you must be knowing that there is some threshold limit which is there for a particular order size. For Nifty, it is 1800 shares. You cannot place trade more than 1800 shares for Nifty. And for Bank Nifty, it is 900 shares. And same thing for different stocks and for index. But now with our order slicing features, you can place more than the threshold limit. You just have to execute the trade after placing the large quantities. You can slice this order into a smaller parts, which we call as a baby order, and execute into our through the exchanges. So how you can do it? Let us understand. So suppose you want to buy, suppose tomorrow being the expiry, and you feel I want to sell 17,500 put option 5,000 shares on intraday or on delivery. So what you can do is, first you need to add Nifty 17,500 put option into your screen of tomorrow's expiry. So once you do that, you will be seeing the symbol at the extreme lower page. And now what you have to do is, you need to, suppose you want to sell it in a big quantity, click on sell, and click on the quantity you want to sell. Suppose you want to sell 5,000 shares, which is above the threshold limit, where if you execute this trade in the normal order, this order will get rejected. But now if you want to execute through order slicing, so you need to click on order slicing over here. So now once you click on order slicing, two box will get pop up in terms of quantity and in terms of price. So now you have two options to slice this order. Either you want to slice this order in number of orders, or you want to slice it in number of quantity per share per order. So suppose you want to slice with the quantity per order. I want to slice it in 500 quantity per order. So I want to slice 5,000 shares, which will have 500 quantities per order, and you want to pay and what price you want to sell. Suppose I want to sell at 35. So here you need to basically select limit as 35. So make sure you select limit over here, because if you don't select limit and if it remains as LTP, which is the default, then what will happen, whatever the current market price is, it will this order will get into the exchange at current market price. So make sure if you want to sell it at a limit price, you select as a limit, And once you slice this order, you will be able to see that 500 shares, so 5,000 shares has been divided into 500 shares per order, and 10 orders will go into the system at a rate of 35. Now here also you can modify, if you want to execute this all orders at a different price, then also you can do it by selecting again to quantity per slice, uh, uh, for 500 shares. Select as the LTP, select as the limit because you want to sell it at 35. Now you want to sell first 500 shares at 35 and the subsequent 500 shares at every 1 rupees interval. So that you can do it by step up or down factor, by feeding the values on step up or down factor. Now suppose you want to add 1 rupees. Now step up and down factors will be taken based upon the tick size. Now every tick consists of 5 paisa. So you want to place the order 1 rupee higher. That means that count to 20 ticks will contribute to 1 rupee. So you need to mention here 20 ticks, and you need to select either plus or minus. So you want to you will be selecting plus because you want it to place 1 rupee higher, so it will be plus limit price. So you need to select plus, and here you need to mention 20 as a tick because 1 rupee consists of 20 tick. You want for every subsequent order should be placed 1 rupee higher. So once you do that and once you slice this order, you'll be able to see your first 500 shares will get executed at 35 rupees. Second 500 shares will execute at 36 rupees. So if you are a small trader and you want to accumulate this at a different value in this one order, you can execute this trade. Now, no need to place a single order of 500 shares in only one order window. You will be able to execute 5,000 shares. However, post placing this order, this all orders will be treated as an individual order. If you want to modify, you have to modify a single order. You cannot modify it at clubbing 5,000 shares. This all orders will go as a single leg. And if you want to do any kind of a modification in the order book, you can do it as per the single leg. Now, one thing which you need to make sure that while executing this order through order slicing, you first need to transfer your money from your bank account to HDFC securities account. You first need to transfer your money, and then only you need to execute this transaction. If you don't transfer your money, because once you execute this transaction, it will first check your trading balance. If your trading balance is insufficient, then this order will get rejected. It won't direct you to the bank account to hold the particular amount. You need to transfer your money into your trading balance, and then only you will be able to execute all this trade. Whatever margin will be required, you can check our margin calculator to check how much margin will be required. If I want to sell this 5,000 shares of 17,500 put option, then whatever margin would be required, then that margin calculator will help you to gauge how much margin will be required, and you can transfer that much amount of money. Will advise you to transfer slightly higher amount so that it is a smooth execution for you. And this is how you can use this. So usually on the expiry day, we do see on the last half an hour to 1 hour of trade, we do see there is a lot of volatility into the market, and we do trade, and there are a lot many clients who trade in big quantity. So this order slicing will help you to basically take benefit of it, and will save your time and can execute a big quantity in a one single order window. So that's it. Now I will just hand over to Mr. Devarsh Vakil to provide us on the weekly FNO outlook on the market, studying the weekly open interest, so that tomorrow being the expiry, it helps us to analyze what kind of a trade to be taken, and also on the view on the market for the next month. So Devarsh, over to you. You are not audible.
Am I audible now, Tarang?
Audible now.
Okay. My screen is also visible, right?
It is visible.
Okay. So thank you. Let's start. So this is again, we are trying to present to you weekly expiry. So let's just jump into the content. What we have seen after the last week's expiry. So last week, many of you were here. we had given a bullish outlook. On the next day of expiry, market went up. Eventually, it closed higher. From there, every day market has come down. The Nifty, if you look at the Nifty, we have seen about 37% rise in the open interest, and Nifty has come down by 3%. Similarly, Bank Nifty about 17% increase in the open interest, and also 4% reduction in price of the Bank Nifty. So short build-up in Nifty, short build-up in Bank Nifty, we have seen over the last 4 sessions. Now let's look at the options. So Nifty is right now, as we know, 17,554 is the level of Bank Nifty right now. 17,554. If you look at the option distribution, we are looking at huge open interest at 17,700 and 17,800 strike price, and a significant open interest at 18,000 level. Now for tomorrow's expiry, in today's change, we see that a lot of options have been written in call side at 17,700 and 800. If you see here, 17,700, 1 crore new shares have been written at 17,700. Almost new 70 lakh shares have been written at 17,800. So what this suggests is that at 17,700 to 800, there is huge resistance for tomorrow. If if international cues are positive, and suppose we are closed at 700 and 17,550, if market were to go up to 17,700, 750, at that time you can actually create short position for tomorrow. Similarly, on the put option side, we see that the highest open interest change in the put option is around 17,400. So if the bearish momentum continues, we can expect market to find support near 17,400 kind of levels. So that is the range for tomorrow. Around 17,400, you create, you cover your shorts and be bullish for tomorrow. Around 17,700 to 800, if you are, if you have the positions, long position, cover it. If you want to create shorts around that level, you can create short for tomorrow's expiry. For longer term, let's look at the FIs also. So FI have been continuously short on the markets. Their long to short ratio is steady around 0.3. So for every 10 short position, they have only 7 long positions. So they are net short on the market. So overall call writing between 17,600 to 800. If you want to be bullish on the March end expiry, our advice is that be bullish only above 17,800. So as and when if market were to cross that level, at that time you become bullish for the March expiry. For tomorrow, I've seen that around 17,700, 800 we find the resistance. We don't expect it to go beyond that. For March expiry also, that is the upper end. Beyond that, you create long position, and 17,400 is the overall stop loss, as we have found support last time around this level. If market were to break those levels, then you create short position for the March end expiry. So these are the two important levels for the whole of March expiry, 17,400 and 17,800. Beyond that, we can expect a sharp up move or down move for the March expiry. For tomorrow expiry, 17,700, 800 is the upper range, and around 17,400 you cover your shorts. Similarly, for Bank Nifty, we can see that the huge right now it is around 40,000 and 39,960. So it is around 40,000. Maximum pain is at 40,300. So around this, we can expect some 200, 300 point around that. It could bounce back. But if it comes to 40,500, at that time you can create shorts. That is where the maximum call writing has happened. Similarly, if for tomorrow, if it were to fall, we found it that around 39,500 there is a lot of support by put writers. So don't be bearish beyond that. For tomorrow, around those levels we can expect some kind of a recovery in the markets. So overall, our view for Bank Nifty is again remain cautious. Here there is more bearishness compared to Nifty. Immediate support is near 39,500, and only if we were to cross this 41,000 hurdle, then only you remain bullish for the March expiry. Overall, 41,000 is going to be a big hurdle for March expiry. Tomorrow 40,500 could be the big hurdle. So around this level we can create short, around this level we can create long for tomorrow's expiry. Overall 41,000, once it is crossed for March, you can create a long position. So this is my view for tomorrow as well as the March expiry. Now if you have any questions, we can take that. Tarang, let us announce the questions and answer session.
Yeah, so if you have any kind of questions, request you to write it on the right hand side of your screen. There is a question answer section panel. So in that panel there is an option called as questions. You can type your questions whatever it is and we'll reply you back. So we'll request everyone to be on the index specific and the thing which we have covered as of now in terms of market and all those things which we have covered. So you can just stick to that so that we can reply you back. So there is already we have got some questions. So Mr. Sashi is asking open interest of which strike price to see before taking any trade. So sir, can you reply on that?
Open interest of which strike price to see before taking. So no, you should look at the strike price of the open interest of the strike price you are willing to trade. Suppose right now, say bank Nifty is trading around 40,000. Now you are pulling bullish, so you want to take a long position. Say you want to buy 40,500 call option. You check open interest of 40,500 call. Strike price 41,500, go to bank Nifty, go to 40,500 strike, look at the call option and see whether there is price is rising and open interest is rising with it. If it is both is rising, that means there is some long buildup, and if that is the case, then you create long position. In derivatives we have four options: either long buildup is there, long unwinding is there, short buildup is there, or short unwinding is going on. Now you have to see what kind of price and open interest action is visible. If price and open interest both are rising, that means strong hands are getting into that particular instrument and that is likely to move higher.
Yeah, one more question by Mr. Venkatarakrishnan. Please explain how to place intraday orders in options and also confirm margin money required will be lesser than the delivery based options order. So I got your point. You're talking about cover order. So cover order and bracket order in options as of now it's not available in HDFC securities portal. You have to pay whatever margin is required to buy in a delivery based option. That only margin will be blocked for an intraday option. So there is nothing as such where you can basically place an intraday options. So you have to buy it on a delivery based mode, and then you need to manually square off if in case you want to square off on an intraday basis. So one more question by Venkatarajan. Kindly demonstrate GTD orders with stop loss and profit booking in options. So yes, we have a GTD orders facility. So I will just make you, I will just show you a small demo of the same. I'll just share my screen. So here GTD orders is available only for index futures and index options, which is there in Empowered. So you can place GTD orders only in Empowered. So now I'll take an example. Suppose you are holding 17,500 put option. I will take the same strike price which we have just inserted. So suppose you are holding 17,500 put option, and now you need to place a GTD orders, or let us take with a different expiry that will help you to basically know the details about it. So now let us take a view. Now suppose you want to trade. You want to trade on 17,500 put option for March expiry. So let us take a view. So now you have already hold on to this position of 17,500 put option of 2nd March expiry. Now you want to sell it in a GTD order manner. How you can do it? Click on sell. Click on the instrument which you have bought. That is in derivatives, NSE. Select option index. Underlying, select Nifty. Expiry day, select 2nd March. Suppose you have 2nd March, 17,500 put option. And now you need to place a GTD orders. So right now you won't be able to place the GTD orders because since we are not allowed to trade. But here in the lower box there will be an option called as GTD orders. You need to tick mark the GTD orders, and here once you tick mark, you need to place the price, whatever price you want to place this order. So suppose you want to place this current market price 101. So suppose you want to place this at 150 rupees, and limit price would be slightly higher than 150. Sorry, it would be slightly lower than 150. And once you place this order, then this order will treat as a GTD, and also there will be a time frame which you will be able to select till how many days this you want this order to remain open. And however, this feature is only available for index futures and index options. So you can place the GTD orders in the market hours, and you can basically use this functionality for buying and selling both.
So Tarang, there are some questions. One question is, does order slicing incur extra charges? So we don't charge anything extra for order slicing, correct?
No, so for order slicing, we don't charge any extra. But however, whatever baby order you executed after slicing it order into a small order size, all these orders will be treated as a single order. So if you have a brokerage of rupees 20 per order, then all the baby orders will incur a brokerage of rupees 20 individually. So that you need to basically take a note of that.
Okay, one more question is, once somebody logs in, if he wants to go into Pro Terminal, how can they do it?
So
And
how
do we
to
have
log
Pro
in
Terminal mobile app?
HDFC Pro Terminal? Yeah, so you can go to your Play Store and download Pro Terminal mobile app. There is a Pro Terminal. If you just type Pro Terminal, you will get the application of Pro Terminal. You can install it, and you can use your same user ID and password which you are using it for login into this website. The same will be there, so you can use that functionality.
Once you log in, there is this on the upper bar, there is a Pro Terminal word. You just click on that and Pro Terminal will open.
Yeah, but he's asking about mobile app, so I'll just made you to install from Play Store. So one more question is, next week market will bullish after 17,800. Mr. Rakesh is asking, can you throw some light on it?
Right. So if we are able to cross that hurdle, then yes, we can expect some kind of short covering come into the market. Tomorrow being a weekly and monthly expiry both, we'll see. Right now, most of the foreign institutional investors have short positions. If they are not rolling it over, and if market crosses that hurdle of 17,800, then obviously we can expect some kind of bullishness. We will come out with another edition for this webinar next week, and at that time we will be able to confirm after tomorrow's monthly expiry.
So there is one more question by Mr. Srinivas. What is the reason behind this huge sell-off which we have seen in today's trade? So any idea?
So right now, one particular group is facing a lot of issues. And today also some media reports were there, and that led to a large sell-off in those stocks. Now in derivatives and in leverage positions, many people have such stocks in their positions. And if you have a large losses there, it leads to a vicious cycle of they have to sell other stocks in order to pay for the losses which they incur in such leverage positions. So B, overall, the global cues were quite negative, and international markets earlier we were there were hoping that there will be only two interest rates hike in March and May. But after the recent inflation data, which has come in much hotter than the expectation, there are now indications that there could be three more interest rate hike, one more in the June, and that is also spooking some investors. So global cues, higher interest rates based sell-off, plus India, individually in India, particularly we have some issues regarding the sell-off in one particular group. These two led to a sell-off in the markets today. Now, from whatever 17,500 50 kind of level we have closed, we can hope for a support to come in around 17,400 and tomorrow's monthly expiry. If markets close near those level and higher, and if derivative positions are not rolled over short position, then we can say that the March expiry could be bullish. So we have to check all these things, and tomorrow in the next webinar we will be able to confirm.
Okay. One more question of Mr. Dilip Mato is already I have tried but unable to log in in Pro Terminal. So, Mr. Dilip, what you can do is I think you won't be having rights for Pro Terminal. You can just write it to our customer service desk, service@hdfcsecurities.com, and they will help you with that. If in case you don't have right, you need to subscribe for Pro Terminal, and then only you will be able to log in into it. Or if you have the rights, you have already subscribed as you mentioned earlier, then the service team, the customer service team will help you on that, and will try to solve this error. One more question is by Manisha, is our GTD and offline orders, it's not offline, it's off-market orders, are different for options? Yeah, they are two different functionality. Off-market orders is once you play after the market hours, and GTD orders is something where you need to place the order for different validity date, and you need to make you need to want this order to remain in the system for that particular date. So there are two different functionality. So Mr. Dilip Mato is also asking from where we can see live long build-up and short build-up in options. So here, basically in options, we don't have this functionality. If you want, you can use a Pro Terminal. I will just make you understand where exactly you can check. Under markets, you can check. Now, if you go for an option chain, so here in option chain, you just have to see basically what is the price movement and the open interest. So as you can see that if the price comes down and open interest rises, open interest changing, that means there is a short buildup which is happening. So here we don't have any kind of a ready-made tool for options where you can check where exactly the long buildup and short buildup for options it is. But yeah, for futures we do have. So if under market, if you see overview or heat map. So here we'll be able to check what kind of positions have got added in a particular stock, long build-up, short covering, long build-up, and short build-up. So I think we have addressed most of the questions. So sure, shall we conclude?
We can conclude.
Yeah, so thank you all for coming out here, and thank you, Mr. Devarsh Vakil, for providing us on the market view. And we again thank you all for coming out and attending this session. Have a nice day, and hope we'll meet in the next week also for the new outlook on the market. Thank you all.